As you know, I'm the head of products for Bloomberg for Sustainable Finance Solutions, and the topic of our dinner conversation is going to be about how to turn solutions into bankable, scalable investments in Brazil. So, according to Bloomberg New Energy Finance, Brazil needs to cut their greenhouse gas emissions between 59 to 67% below 2005 levels by 2035, and the biggest emission reductions will come from agriculture, land use, and forests. So with me, I have four amazing guests, and I would like to introduce you themselves. So Clara Barby from Just Climate brings the climate-led investors playbook, running funds across from industrial and natural climate solutions. Her newest strategies focus on the land transition, anchored by the California State Teachers Retirement System and Microsoft's Climate Innovation Fund, and made its first investments in biopesticides, agriculture services, and biodiversity monitoring. As head of the climate arm of Generation Investment Management, her cross-disciplinary team spans across London, São Paulo, and San Francisco. Then I'm going to Tony. So Tony Lent is a co-founder of Capital for Climate. He helps turn national pledges into purchased orders. Brazil's National Determined Contribution Plan says that Brazil will restore 12 million hectares by 2030, and Tony's ecosystem aims to deliver the first 5 million with real vehicles, long-term contracts, and practical risk tools. His platform curates more than $29 billion of viable nature projects globally. Of those, 1/3 is in Brazil. Jens Nielsen from World Climate Foundation is the alliance architect of our dinner table. So through the World Climate Foundation, he helps convert commitments into allocations. So think about $130 billion of Nordic and UK pension commitments. And he's convening a global investor hub at the 2025 United Nations Climate Conference in Belém. And last but not the least, Wolfgang from GIC leads on-the-ground investing for Singapore's sovereign wealth funds in Brazil and across Latin America, and co-leads the Sustainability Solutions Group, a global team investing in early-stage energy transition opportunities, as well as companies that need capital to scale up proven technologies. Okay. So as you can see, I have four amazing guests, and we have a lovely dinner ahead of us. So in the next 30 minutes, we will move from the thesis with Clara to what to buy with Tony, to the instruments and alliances that will reduce the risk with Jens, and finally to what clears an investment committee to get a yes with Wolfgang. So you should leave today with knowing what to buy, how to de-risk it, and why it will or would meet your returns threshold in Brazil if we all come together. So Clara, let me start with you. So as we heard, 50% of the emissions are not actually in the energy transition in Brazil. They're actually on the land transition. So I'm curious to hear from you on that side, from agriculture, water and sanitation, waste or restoration, which one do you think offers the best risk-adjusted returns?
Okay, so we've been on a real journey here, and it's interesting because when you say land transition, you typically think real assets. You think forestry and agricultural holdings. We're a 31 billion AUM manager across public markets and private markets. So we have the full range of instruments. And we looked at the land transition, and our observation was, yes, we need capital to continue to flow to real assets, but actually the really promising risk-adjusted return opportunity today that's differentiated is actually growth capital. And it's growth capital into what we think of as the picks and shovels that landowners and farmers need in order to transition their land. So think bio-inputs like biopesticides and biofertilizers, precision agriculture, farmer advisory services, all the way through to some of the more novel products like biodiversity monitoring services. This area, if done right, because the scale of the land transition has an enormous opportunity ahead of it. So just a couple of examples to make this real. We've invested in an alternative to chemical pesticides, which is a no-brainer for a farmer. It's a drop-in solution, and it's got no residue, and it's targeted. It's RNA-based. So it doesn't require the farmer to pay more, and it's more effective. It increases yield, and critically, it improves biodiversity outcomes. We're looking for those kinds of solutions. We're not looking for the equivalent of a green premium in nature. We're looking for the ones that are a no-brainer for the farmer.
And do you think we still need catalytic capital going into this space?
So from what we're seeing, there's always a role for catalytic capital to have certain types of impact, and we accept that. We're a manager on behalf of primarily pension funds are our clients. We also have sovereigns and endowments and family offices. They expect us to pursue attractive risk-adjusted financial returns as fiduciaries. So what that means is that there is stuff we say no to. But if the question is the opportunity set big enough for the fiduciary investor? Our answer is yes, with one caveat, which is that I think it is really important when you're targeting newer investment areas to skill up for it. To do it as a generalist, I think, is hard. What we've done is combine the growth equity skills you'd expect, but with agronomy, biology, and carbon accounting within an investment team, so that we spend a lot of our time thinking about what farmers want and need, rather than pursuing a multi-thematic strategy, which I think would make it harder to really find the risk-return opportunity that you're looking for.
So what I'm hearing you saying is that you actually are looking for this deep expertise when you're actually deploying capital. Is there anything you'll change in a contract that will make that deal or opportunity bankable from day one?
So interestingly, I would ask that question of our industrial strategy. We have an industrial decarbonization strategy, and I definitely have a long answer there. But when it comes to the land transition, again, the growth equity opportunity is actually not at project level. So if you think of some of the newer areas for the land transition, restoration, for example, I do think we will end up with a restoration industry that looks a lot like the renewable industry looked in its early stage. A lot of the financing tools we can use are actually going to be the same, and that will unleash a whole load of projects where that question would be the right one. But today, the opportunity is in the developer itself, which is a top co-investment into a company. And so actually, you don't need the bankable offtake, yes, is at the project level, but you're looking at whether the developer itself can scale to deliver on the scale of the renewable opportunity, akin to what we saw in the development of renewables.
Okay, so what I'm hearing you saying is that we actually, when you are investing, you're not just looking at investing at a particular project, we're actually looking to say, can this project scale and go much bigger? Okay, so talking about projects, we go into Tony. So Tony, you are in the nature-based solutions, and you have $29 billion of opportunities out there, where 1/3 of those are sitting in Brazil. Could you give us an example of what a large investor could invest today in Brazil?
Sure, but let me start by just giving you a sense of the scale of growth in this market over the last couple of years. So we've been working in Brazil since the fall of 2021. We've organized an investor collaborative. We've also organized a coalition of the leading development platforms in the country that probably represents around 80% of the absorptive capacity within the developer community. And we've organized together with Converge Capital 3 annual summits on nature-based solutions in Brazil. In the first year, 2023, the average deal size was about 5 to 10 million at the developer level. In the second year, the average deal size was like 15. In the third year that we did it last June, average deal size was 30, and we had a number of funds that we presented that were looking for $250 to $350 million. That's all in the course of 36 months. So you've seen very significant, rapid maturation of the sector. And I would say, if I would leave you with no other key concept for today, I would say that Brazil is going to play a similar role in nature-based solutions as China has played in renewable energy scale-up. In terms of product, there's product in multiple asset classes. You can find product in real assets, in venture, in private equity, and infrastructure as restoration. So I agree with Clara on that. And just to be super specific, at the intermediary fund level, you've got players like Patria, Fama, RRG, Regia, and others, all in the market right now with funds that range between $200 million and $400 million. And they all play in different parts of this business, whether it's degraded pasture restoration, which is certainly the largest single opportunity in the real asset space right now in Brazil, or whether it's specialists that are going after pure restoration where the primary driver is carbon. Then at the developer level, the developers are out looking for pretty significant capital. So just to give you a sense of some of the leading development platforms. So Regreen just won the Earthshot Prize a couple of days ago. Regreen is in market. Courageous Land is in market. Mombec is in market. Biomass is in market. All very professionally managed platforms that are looking for, in some cases, parent equity, so topco equity, and in many cases, they are starting to pioneer the beginnings of a project finance market for their SPVs at the project level. So, and they're also, in addition to that, specialist fintech companies that are doing different parts of the market, like Trave, which is raising a specialized fund for bio inputs into regen ag. So I would say, honestly, worldwide, there is no market that is developing faster than this market for nature-based solutions, and no market that is more sophisticated in terms of different types of options to put capital to work and the quality and speed with which the entrepreneurial community is developing here.
So Tony, may I ask you, would you be able to, like, for the people in the audience that probably are not in the weeds into the NBS sector, would you be able to provide some idea of the contract length and also maybe the expected returns of these projects?
Sure.
And how do they compete with the clean energy, for example? So if they have two options, do I invest in clean energy or do I invest in land?
Well, I think you can use, there's sort of three models you can talk about with this, and the model that's closest to the renewable energy model is probably the carbon project model, right? And there, investors are really expecting, in order to take that risk, they're expecting returns at 20% and above at the project level, right? The middle of that spectrum is the agroforestry developers. And I just want to say that the restoration developers in Brazil have attracted probably the lion's share of private capital that came in over the last couple of years, with the agroforestry developers very close behind. And the agroforestry developers are pitching a 7 to 15-year model with returns in the mid-teens. And then you switch over to the restoration of a degraded pasture, that's a 7-year model. But interestingly, it's a 7-year model that looks quite profitable compared to typical ag land investing, where we're seeing development platforms talk very seriously about creating 1.5 to 2x MOICs on an asset base in 5 to 7 years. So pretty solid, particularly given that a lot of the commodities that are sold off of those assets are dollar denominated, so it provides a kind of a hedge automatically in the structure.
Okay, great. I may go to you later on, Wolfgang, on the returns of the two projects. But before then, Jens, through the World Climate Foundation, and now you are the convening of the Global Investor Hub at COP30 in Belém, you are effectively shaping the next phase of how large asset owners can turn ambition into allocation. So what will be one simple mechanism that will make this pipeline attractive to pension funds?
I think you need several elements, and it kind of follows sort of the line where you first have to get their interest, and I think the best way to get their interest is to go to an area where they already have experience, and that would be in the energy space, and the invention of the offtake guarantee, the power purchase agreement back in the 90s in California that have spread to the rest of the world. And basically the beauty of that model is not so much the model itself, but it fits one of the core asset classes of institutional investors with a long-term, low yield, sometimes quite high yield, but anyway, that it fits one of the key asset classes that is making the mix so they can fulfill their fiduciary duty. So provided that such a model could be used in these cases, which I can hear from the previous speakers here, or that it's possible, I think that would be a first good case. Then you are, in this case, dealing with some risk, so you need to mitigate that risk. And the experience that we have, for example, is through a project called IMCA, between the Nordic countries, where they supply until now $500 million US in the public finance to de-risk private sector run funds, and that's typically done through technical assistance and also through first loss guarantees. So I predict there will be some need here to look at the first loss guarantees up to a certain amount, and the third, and there are certain mechanisms you can use. I just mentioned IMCA, which is sort of the product or the organization coming out of the Nordic countries. There's also a venture called Scaled, which actually is more privately sector owned by CDPQ and Allianz, and funded by Canada, Germany, France, And then I hear that in Brazil you also have something called the Eco-Invest program. So there are different things, and it's very good that we have that we try different ways of moving forward to reduce risk. And then I think when I speak to some of those institutional investors that have done forward integration in energy, and ask them, is Brazil an interesting marketplace? They will say Latin America is very interesting for wind and solar, but Brazil, they always attach a high currency risk to Brazil. So it probably needs a dash of risk reduction on the currency, because it adds too much on top of the risk that you have here. So it'll be a mix of those three things.
Fantastic, thank you so much. And we'll actually touch the elephant in the room like in a second verse. So Wolfgang, thank you so much for being here. So GIC is one of the world's largest sovereign wealth funds, managing, I believe, around $900 billion in assets globally, and it's being one of the most active international investors in Latin America, particularly in Brazil's infrastructure, renewables, and logistics sectors. So now, if you had to choose between energy transition or land transition, or others, which is the sector that excites you the most?
So first of all, thank you, Milken Institute. Great to be here. Congratulations on this inaugural event here in Sao Paulo. I'm sure there'll be many more to come. Thank you all for sticking around. Patricia, this is a really difficult question because land transition is certainly a focus of ours, and Clara already talked a lot about why this is a very interesting and attractive area to invest. And we actually have invested in, so for example, biological inputs in Brazil already with good success. But I would put the energy transition, in particular, the build out of the power grid, which for us is a mega theme within our sustainability solutions group at the moment globally, right? And actually not just the infrastructure assets, which we own many of around the world, but also all the equipment, the services, and the software that go into this build out. Software in particular to make the grid smarter and more flexible, which is very important as more renewable power generation is coming online. In terms of services, we actually just announced an investment in a company that provides stringing services, stringing of the power lines for transmission networks, very important for the build out going forward. And this company uses drones. So a new drone technology to do this much faster and in a much safer way than what has been done previously, sometimes using helicopters.
Okay, fantastic. Okay, this is good because we need drones to actually make sure that the nature is still protected. So maybe Wolfgang, maybe like if I continue with you, let's talk about the elephant in the room. And Jens also gave us some indication of those elephants. So I can think about what are the biggest blockers. You are in the ground. You have been here in Brazil, if I'm not mistaken, 11 years. You have seen the Brazilian, Brazilian economy through that time. What is the elephant in the room? So when you're trying to get those deals done, what's stopping you? Is it the pipeline this small? Is it the policy, not the right policy? Is it the currency fluctuation, as Jens mentioned? Is it the fact that we don't have data, so the measurement, the reporting, and the verification data, or the returns that GIC headquarters are expecting to see? Or a combination of several, maybe.
It's certainly a combination of, well, all of the above, probably. And there's no silver bullet. There's no one thing that we're looking for. In terms of opportunity, we certainly need good partners because we typically invest on a minority basis, right? So we need somebody who will day-to-day control the investments, look after the investments, good management teams. We need business models that are sustainable. GIC is a long-term investor. We have a 20-plus year investment horizon. We don't focus on quick flips, opportunities to just make returns in the short term. So these need to be business models that really have legs and will give us the opportunity to generate good risk-adjusted returns in the long term. In Brazil in particular, I would say at the moment, The issue is actually more the pipeline, right? The opportunities, especially opportunities at scale, right? As a sovereign wealth fund with a stable, large capital base, we need to find opportunities that have also a certain scale. And whilst the potential here in Brazil is certainly huge across a number of segments within sustainability, the number of scalable opportunities and opportunities that are already at a certain scale that make them investable for us is actually quite small. And I would love to see and would encourage, especially the corporate sector in Brazil, to be a lot more proactive around sustainability and think of ways to use this huge potential that the country has to come up with more sustainable solutions going forward.
Okay, so I'm going now to Tony, because Wolfgang, you talked about scale. Tony is the platform. $29 billion there. We have more than 34, I think, organizations in Brazil committed to NBS. Tony, how can we provide this scale to Wolfgang to invest and bring his $900 billion to Brazil?
I think you need to understand what kind of investors are looking at putting capital here. When you get to effectively a sovereign, the check size is $250 to $1 billion per transaction. But when you look at a substantial asset manager that's active in this space, so AXA or, for instance, Just Climate, they don't need to write a $100 million check. They might be perfectly happy writing a $30 to $75 million to $150 million check. And as we look out and we see the development community, just project developers and just a subset of project developers looking to put $6 billion to work between now and the end of 2028, those are mostly 10, 20, 30, 40, 50, $100 million checks. The thing that you need to think about is what's the intermediary market like in Brazil? And what we've seen is the intermediary market was already very sophisticated. It already had an experience with sustainability, and I would predict that it doubles in size over the next 48 months, and that a number of asset managers that are here, like Regia, are basically extremely well positioned to go into the international market and absorb $200, $300, $500 million checks. So I think any concern about pipeline is really very short term, and it's really from the perspective of the investor, not from the actual underlying opportunity. The opportunity itself is booming.
Okay. Clara, what's your view? You are in the ground. We know what's going on here. We need the sovereign wealth funds to come and invest their $1 trillion. How do you make it happen? So what's the elephant in the room, and then how do we fix it?
Yeah, so as you say, we see the opportunity in Latin America as being very significant. We have global funds, but we also have regional. And we have a team that's been investing here in Brazil for a long time. And so we think it will happen. However, I think there are two things that will help. One is that actually the big capital opportunity will be unlocked, and I'm talking about the industrial side as well as the land transition, if we can actually really bring the initial phase down the cost curve in terms of getting these developers up and running. And so you do need a mindset of, yes, we're going to go to infrastructure, which is where you really get large volumes of capital moving, but we're also going to go to what I know both Wolfgang and I would call the missing middle, which is this area between, you've got VC doing the binary risk, then you've got private equity gravitating to asset light, as it often does, and services. Then you've got infrastructure. There's this area in between all of it, which is infrastructure-like. We tend to call it value-building real assets, because actually on a relative basis to other real assets opportunities, the returns are very interesting. But it is atypical. And so you need to have asset owners see that opportunity, that space between asset classes in their strategic asset allocation framework. And if you can move more capital into that initially, that then actually unlocks the more traditional infrastructure, long-term bankable offtake projects. So for the first time in our industrial global fund, we're starting actually to play with instruments where we will both go into the topco and be the project investor simultaneously to get the strategic unlock at the top and then start to move the capital at volume in the projects. So we need more of that.
So I was going to say to you, Wolfgang, would you agree?
No, just reacting to what Clara just said. I mean, since we're also focused on this missing middle where technologies are proven, but the projects are not infrastructure yet, so you need somebody to help bridge that gap. What What goes a very long way in helping us there are long-term offtake agreements, right? And some of the companies that have been on stage here are actually quite proactive in providing those. No, it goes a long way when we go to investment committee that the company actually can demonstrate we have demand for this, and it's actually contractually secured already for quite a number of years.
Okay, so it makes sense. So having that security that the returns will come. Okay, so the next part 2 of this panel is going to be about asset owner alliances, scaling pipelines, solving risk, and lifting bottom-up innovation. So as you know, the asset owners, they actually own $55.7 trillion as of 2023, according to the Thinking Ahead Institute's Global Pension Asset Study. So what I would love to do is just to make sure that we link this panel with the next one that is coming ahead is, you have the opportunity to mobilize these $56 trillion of assets. And what I would like to ask is, what will be one action that you would like this group of asset owners to commit to do in the next 12 months? Who should lead it? And what is the number that you would like to track to make sure we are on track? So I'm going to start with you, Tony, and then I'm going to Jens, then I'm going to Clara, and then because you are the asset owner here, you have to ensure that all the other asset owners will agree with you, okay? So should we start with Tony?
Sure, I think the number one thing I would ask them to do is to appoint one person as the lead on their nature-based solutions investment strategy, because it's a vast area, it's fast growing, it's complex, and it takes some research and time to get their arms around. And then the second thing I would say is, explore the intermediary market, because it's really large, and I think a lot of asset owners don't have an understanding that it's actually, that pipeline already exists.
And how would you know that we were successful?
If they were
in 12 months?
I would say out of your real assets asset class, and out of your infrastructure asset class, and out of your private equity asset class, having 2 to 3%. 2 or 3% AUM allocated in that emerging sector.
Okay, we go.
I think that's my measure.
Fantastic, 2 or 3%. Nice. Okay, let's go to Jens. So you actually lead an asset owner alliance. So I'm curious with your answer.
Well, I would get them to commit a certain amount of money that they would invest in this area, and that has to be ambitious, an ambitious amount of money, because else it's not of their interest. And it has to be significant for them also. And then, because we do need some help to start with, I would ask them to specify what they need in terms of framework conditions for them to fulfill their fiduciary duty or earn the return that they need. And often those conditions are possible to satisfy from the public sector and quasi-public sector. So those would be the two elements, and hopefully that will get them to a stage where things will run by itself in the long run, because this is all about scaling.
And who do you think should lead?
Should lead?
This alliance.
Yeah, it should be the private sector, it should be the asset owners themselves.
Thank you. Okay, so what about you, Clara?
I would like asset owners to look at their entire asset base, from real estate holdings to public equities, and ask themselves, how are these assets going to transition? Because incoming regulated disclosure of transition plans is on its way in over 38 jurisdictions. When we see that information, what you're going to see is companies are going to get stuck. They're going to electrify, they're going to use passenger EVs, and then they're going to say, I need green cement, I need green steel, I need sustainable aviation fuel, and I need regenerative agricultural supply chains. And therefore, I need those products and services to come down the cost curve and be widely available. And I hope that when they think about that hard, they will see the fiduciary imperative to tilt their private markets allocation to invest in those solutions that the rest of their asset base needs to transition. And I hate to close by complimenting Wolfgang, but that is exactly what GIC has done.
Okay.
Thank you.
So Wolfgang,
Well, first
you
of all,
have to convince your peers because they are coming next.
Sustainable investing is a strategic priority of GIC. We're very long term, and sustainability is one of the mega trends long term that will present risks to the portfolio, but also good investment opportunities. what I would say, and this is the case for many other asset owners as well, we're very aligned in that. I would say the focus has to be on decarbonization in the real world, like focusing less on how green does my portfolio look, but really thinking about how do my investments and my investment activities help accelerate the decarbonization in the real world through investments that we make in green technologies and the way we engage with our portfolio companies on their transition plans. So that's really what I would focus on rather than throwing out a target and, as was said on the previous panel, it's time to focus on implementation and the how as opposed to on the why and the what.
Fantastic, awesome. The time is out. I hope you enjoy our dinner side conversation here. Thank you so much, everyone. Please welcome joining me, applauding to our beautiful panelists.